BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Good morning, everybody. Let's have a look at crypto as a whole. Maybe just a little view on Bitcoin, but just crypto as a whole. So if you were a member of the Patreon, you would have had a decent stream last night where we basically looked at most things and deduced that pretty much all of the charts, not all, but what felt like about 90% of the charts, were all looking pretty bullish. Some of these crypto coins, I sound like a granddad. Ugh. Some of these crypto coins, some of the charts do have or did have projected top targets of kind of about almost double their current price. But there's a problem. Bitcoin is the problem, and Bitcoin, although has an amazing looking chart, I expect to start consolidating soon, or at least have a big hiccup when the halving kicks in this month. So it's coming, it's around the corner. It was similar to probably how the ETF had a hiccup, which feels like a long time ago now, doesn't it really? This is it, wasn't it? This is it. Who would have thought? Bush, bush, whoa! So, the overall vibes of buying crypto, buying Bitcoin from what looks like the ETF management and all of those guys, it seems unwavering. They're not bothered. They're going to keep buying into it, I would imagine. And any dip that comes, if it's a halving dip, which I would imagine probably is, might probably get bought into also. I think a consolidation for Bitcoin is going to come as a whole with the market, S&P, Nasdaq, uptrend on the Dixie. I think the markets are now so tied together that it's ridiculous. They're incredibly bound. You know, they are effectively shadows of each other. And so to look at crypto independently, it might be a bit of a fool's game. But we'll see. I mean, they have always been correlated, but I think now with the ETF, generally they're going to be way more correlated. They're basically going to be identical, right? So that might be the better way to try and establish some kind of high in the market. However, there is obviously fundamental reason to assume that the halving will cause a buy the rumor, sell the news dip. And so long as the stock market holds and continues to move up, the dips will be bought and Bitcoin will continue to go higher. I've got this box in here. I've had it in for a while. It wasn't particularly relevant. It's relevant to an extent, but it's not perfect. Nothing ever is. I still think that this is roughly going to be where we'll see our next major top, if we get there at all. The Bollinger Band on the dailies hitting up here at 74,500, 600. And if we take ourselves to a weekly, we're getting a bit of rejection this week on the Bollinger Band itself. It's not a big deal. That's just a little pit stop. When you get super bullish, you normally extend outside of the band and get sucked back within it. And we've got no bearish divergence on this weekly RSI. We do have on the money flow index, but it's sometimes these things just don't mean a great deal. Bearish divergence, for the most part, I always take notice of. And 2 drives on a weekly is normally enough to suggest a peak as well. So we are getting that. So this is why I'm trying to put it out there, that just because the technicals tell you one thing doesn't mean it's going to behave that way. The FOMO, if that's what you want to call it, or just the consistent amount of dip buying, or just the greed is going to keep things going. And I've been listening to a few things. What's his face? Bob Lucas made a new video last night, so I tuned in on that before I went to bed, or at least half of it. It's a bit long-winded, but who am I to talk? And yeah, he's thinking, well, yeah, maybe we are going into some, what did he call it? Some kind of left translated cycle, or basically, what's the best way to put it? An early top with a larger consolidation, similar to the dot-com bubble. I can see that. I could see that, because this time is different, and that's the ultimate YouTube thumbnail, isn't it? This time is different. But he said it, and we can see it, so we kind of know that. Last time was also a bit different. It wasn't that different, but it was a bit different because of the reasons for the early parabolic run. We had obviously the rest of the stock market do the same because of that March crash, and then turn on the money printers and explosion. If anyone was part of my channel from way back when, we basically predicted quite easily, I suppose. If there's going to be a peak in Bitcoin, it's going to be around here, around December 2021. That was always the case. Whatever the market was doing around here, oh, we're going up, don't worry, the parabolic top is going to be around here. Don't worry, we're going down. Accumulate, buy the dip, it's going to end here. Oh, we've crashed. It's no big deal. Buy the dip around here. So when we saw this running up here, it was kind of like, wow, if this is where we are already, you can only imagine where we're going to be in 2021. And then we had this big pullback and then basically a double top. This is what it is. It's basically a double top. Bearish divergence across the board all over the place. So it was different, even though the end was the same. So we had the self-fulfilling prophecy of, and it wasn't just me, everybody was thinking the same. It was the vibe. It was more than the vibe. I mean, it was the technicals, it was the time frame, it was the expectation that that's what's going to happen, and that's what creates a secular market, right? That's what happens. That's all it is. For the most part, that's all TA is as well. By the way, technicals are bots, algorithms, and people like you and me looking at the same sort of indicators that reference the same things on a chart, price, volume, and time, whether it does it in a moving average or a fib retracement or itchy cloud or a blah, blah, blah or a blah, blah, blah. Yeah, then pretty much most of them all based around the same data, which is price, volume, and time, which more or less gives everybody the same rough entry and exit points and expectations. So it's human behavior. It's bots and algorithms. They're all working off the same data, and that's what causes supports to work, resistances to work, and signals to play and stuff like that. So there is still the expectation across the board for many that this is a 4-year cycle. So I would expect that even if it turns out not to be a 4-year cycle, we could still see an attempt to play out as a 4-year cycle. So let's say we went parabolic 100,000, 150,000 this year. Early blow off top, right? And then we consolidate throughout the back end of this year and into the beginning of next year. Would you still expect an attempt to create a new all-time high, even though it would become quite clear that we've had a significant blow off top? I think there would be an attempt, similar to that what happened over here. And I know this doesn't, it's hard to imagine, but 55% retracement here, 55% crash really within just over, it was about 6 weeks, a 6-week period. Bitcoin lost 50%. Some altcoins lost a hell of a lot more than that, a lot quicker than that, and then bang, all the way up. Some altcoins did more than just this. Some altcoins did 10x from there. So look, the market, no one really knows. This is what I'm trying to put across there. No one really has a clue, it's the best way to try and think about it is that majority rules. It's a democracy of traders and analysts. So yeah, left translated cycle, I can see that. 4-year market cycle, I can see that. So if it's both of these things are completely plausible, then there's going to be an attempt for those two things to come to fruition, because that's all that's going on here. People buying people's expectations and majority rules, not as in the majority, but the majority of the money rules. It's going to be interesting. It's going to be interesting to see what happens if and when BlackRock decide to sell. That's going to be very interesting, because that, depending on how they go about it, could completely demolish Bitcoin completely. That kind of selling pressure could completely destroy it. So I don't know. And no one really knows. That's the point, all right? It is the point. And I think Bob Lucas said that as well, which is something that I always try and put across as, I don't know. This is my best guess. I don't know. It's something that I think a lot of YouTubers and people always seem to think that. We had a good discussion on it actually yesterday on the Telegram, about what it is that I do or how I trade and my expectations and my strategies and stuff, and look, some of it quite easily can be put down to luck. Like you got to admit that. And if you can't admit that, then I think that makes you a bad trader anyway, because you have to recognize that sometimes you get lucky and sometimes you get unlucky. despite the skills and the attention to detail and the strategy and the planning, luck plays a big part in a lot of the things we do in life, you know? Same with bad luck. Right, so that was a nice long-winded waffle, wasn't it? So let's think about this more then. Let's have a look at Ethereum. Off the 15-minute chart. So Ethereum, 4 hourly, down below a Bollinger Band, up above a 200 exponential. It's really stuck between a rock and a hard place. It's consolidating here. We're looking for breakout above the 3,550, we'll call it. Once that's closed on a 4 hourly, we should be looking to make our way back up 3,650 and hopefully back up towards 4,000. That's what we're looking for. That's what we're hoping for. Bitcoin closed last night above an area that I was hoping for, and at the moment we're looking to reclaim that Bollinger Band center itself, which again is bullish for Bitcoin, and I would be looking for Bitcoin to make a new all-time high very soon, right? Very soon. And as to what we do at that point, it's a different story. We'll have to monitor it bit by bit. But my expectation is, given this price right this very moment in time, does look to me like it's ready to put in a new all-time high. So back up to 74, maybe up to 76 and a bit beyond. I'm not going to call for unrealistic numbers that aren't present on the chart, but I am going to call for a new all-time high, which, you know, as far as I'm concerned, is a bit of a bold statement, but that's what I'm calling for. And it should allow for the market as a whole to print higher highs as well. But when the market stops, which is going to be stopped by Bitcoin, then everything should stop and we should all be getting out. Or I will be getting out. You guys do what you want. I will be limiting my positions back down to as much as an 80% cash position. At the moment, about, to be honest, about 65, 70. No, about 65 at the moment. So, look, that is it. There is not much more to say. It is the weekend. It's also the holiday, which is why we were basically static yesterday. A few little attempts to move up across the board. Meme coins are looking good, by the way. We were looking at Doge and SHIB, and we didn't look at Pepe, but you can only assume that that's going to be looking good. They were looking extremely good. In fact, they were looking like the best charts out there, which is amazing. So that, to me, it sounds like retail are arriving a little bit and are looking to try and catch up with some of the missed out gains that's taken place for Bitcoin in general. So, we missed Bitcoin. What are we going to do? Buy Doge, buy these high risk things. And look, when you're looking at the technicals on them, they are looking good. So I think there is some attempt for retail to try and catch up for what they've lost out on, which can pose a bit of a problem, because if you're going to make money, look, the BlackRock, who are they making money off? Michael Saylor? No, they intend to take money off you. That's what they want to do. That's what they do. That's their job. That is their job. You employ them to take money off the people who don't employ them. That's basically it. So that's their intention. There is no other way around it. That is their job, is to take the money off those people and put it in the pocket of the people who employ them, or who... Yeah, you know what I'm talking about, and so just don't let it be you. Don't take unnecessary risks. The market's always risky, and now we've got some dodgy geezers at the top, really, that with a master plan to probably drain the life out of you. So we just got to think about all of these things before allocating large amounts of money into things that don't necessarily require it. Anyway, there's not much more to say about this. I'm probably going to make a video at some point today of an educational topic of what it is that I look at to create a setup. I'm actually thinking of creating a small course for trading for beginners, you know, and sticking it on Udemy. Just a very basic thing to give people an idea of what it is that I do and how I can make money out of the markets. Because I'm no rocket scientist, but I am able to do this for a living. I appreciate, you know, that there's a attraction to that kind of lifestyle. I have to say that yeah, for all of its pros, there are also some cons. But yeah, that's probably for another day. But I'll make a video, hopefully today, if I have time, that basically shows at least a couple of the types of setups that I look for, because there's lots of different ways to do it, which is why I think it probably requires a small course, really. So if anybody's interested in the idea of me creating a course, let me know and I'll get started. Other than that, though, I hope you have a nice day. Take it easy.